Hi everyone, it's Ricardo Gonçalves here coming to you live from the SBS newsroom. In 30 minutes, we'll get the race that stops the nation. In a couple of minutes, it's perhaps the bank that stops inflation. The Reserve Bank is set to deliver its interest rate decision. Will we see another 25 or 50 basis point increase to the cash rate? That is the question. Right now, it stands at 2.6%. Remember, it was at a record low of 0.1% back in May, and the Reserve Bank's had to go pretty hard lifting interest rates to combat rising inflation. That inflation rate currently at 7.3%, the headline rate. The underlying rate, which is what the Reserve Bank keeps an eye on because it strips out one-off variables, is at 6.1%. The RBA wants to keep it between 2 and 3% to sustain the economy. How does it do that? By lifting interest rates. And we already know that consumer prices are going to continue to rise. Only last week, the government in its budget said that electricity prices will rise by 56% over the next 2 years. And we heard from some of the supermarket chains saying that they expect food prices to continue to rise because of inflation and, of course, of the floods. So what does the market think? I am joined live now by Azeem Sheriff. He is an analyst at CMC Markets. Azeem, thank you very much for your time. As we wait for the RBA decision, what's the market actually expecting?
Yeah, thanks for having me there, Ricardo. So what is the market actually expecting is most of the economists are actually expecting a 25 basis points. So we saw from the last RBA meeting that the RBA actually slowed down the pace of tightening from 50 to 25, which was a huge move. Everyone really asked so many questions. The $1 million question is why? The RBA basically said, look, comparatively to our other economies, we're actually going at a very steady pace in terms of tightening. And because we have meetings once a month, as opposed to, the UK and the US where they do it every 6 weeks or so. So, comparatively and relatively, we're pretty much on the same pace as them. And their inflation rate is a lot higher than ours. So, again, expectations are 25, but the risk is to the upside to potentially a 40 or a 50 basis point hike.
Okay, Azeem, I'm going to get you to hold on for a few moments and we'll come back to you once we have the decision from the Reserve Bank to see how the markets have reacted and what happens in a few moments. So thank you very much for joining me. Please stick around. We are waiting for that Reserve Bank decision in just a few seconds' time. Like Azeem said, the market's anticipating a 25 basis point increase. We had some property figures coming out today as well, showing that those interest rate rises are hitting the sector. Property prices down by 1.2% in October, falls in every capital city over the month, and over the year, prices in Sydney down by about 8.6% and 5.6% over the year in Melbourne. Of course, those higher interest rates are constraining borrowing capacity. So because people have less of an ability to borrow more money, those prices for properties are coming down. So the decision should be coming out right now from the Reserve Bank. Let's have a look. The Reserve Bank has indeed lifted official interest rates by 25 basis points. So it's saying that it's increased interest rates by 25 basis points to 2.85%. That means the official cash rate has now lifted to its highest since about May 2013. So the official cash rate up by 25 basis points to 2.85%. The last time we've seen interest rates rise this hard, this fast, was back in July 1994, when interest rates went from 4.75% to 7.5% in December 1994. So taking a quick look at what the RBA said in its statement, it's of course saying that inflation in Australia is too high. It acknowledged a CPI rate at 7.3%. A further increase in inflation is expected over the months ahead as well. It says the Australian economy is continuing to grow solidly. The labour market remains very tight, with many firms having difficulty hiring workers. Wages growth is continuing to pick up from the low rates in recent years. One source of of uncertainty is the outlook for the global economy, which it says has deteriorated over recent months. Another is how household spending in Australia responds to tighter financial conditions. And again, the board repeating something that it said in previous months, that it recognises that monetary policy operates with a lag and that the full effect of the increase in interest rates is yet to be felt in mortgage payments. It says that higher interest rates and higher inflation are putting pressure on the budgets of many households. So the last statement, it says the board has increased interest rates materially since May. As I said, it was back at 0.1% in May. Now it's at 2.85%. It says this is necessary to establish a more sustainable balance of demand and supply in the Australian economy to help return inflation to target. Its target band, of course, is 2 to 3%. It says it expects to increase interest rates further over the period ahead. It's closely monitoring the global economy, household spending, and wage and price setting behaviour. Again, it's repeating the size and timing of future interest rate increases will continue to be determined by incoming data and the board's assessment of the outlook for inflation and the labour market. The board remains resolute in its determination to return inflation to target and will do what is necessary to achieve that. So the Reserve Bank lifting official interest rates as expected to 2.85%. Let's bring in back Azeem Sheriff from CMC Markets. Azeem, it's as expected, but how have the markets reacted, both equity and currencies?
Yeah, so we're just looking at the AUD USD chart there, Rick, and it looks like the Aussie dollar has actually dropped down about 40 pips. So a bit of a negative reaction there from the Australian dollar. And I guess the reason for that is the Australian market isn't, the rate differentials between Australia and the US are going to be even more wider, with the expected US interest rate to continue with another 75 basis point. That's not good for the Aussie dollar. And so we're expecting a bit of a sell-off there, in which we saw the 40 pips. The ASX, on the flip side, actually rose prior to the RBA decision. So it looks like market were expecting a bit of a positive news, but it looks like there hasn't been much of a reaction post the RBA, and basically the market has priced it all in. Hence, there's not too much of a movement from the ASX, but it is up 1% from the open from this morning.
Azeem, the RBA is saying in its last paragraph that the board expects to increase interest rates further over the period ahead. What's the market saying? How much more?
The market is very aggressive at this stage there, Ricardo. So they're expecting it to go to that 3.94%. And that is quite aggressive at this stage. Usually when these aggressive, I guess, forecasts occur is when there's peak fear. And with inflation, as you saw, it was a 7.3 headline, 6.1 core CPI. It is quite, the pace of inflation is picking up. So therefore the market's going to price quite a lot. The economists, however, a lot of the big four economists are saying probably it's going to be around that 3.5%, 3.6% mark. So again, that's probably more realistic as opposed to 4%. But the case is it's probably going to be a higher for longer. So it could be around that 3.5% for a longer period, as opposed to 3.9 or 4% for a short amount of time.
And it's not just Australia that's lifting interest rates, it's happening around the world. But we've got a trifecta of central banks meeting this week. The Reserve Bank of Australia just now. We've also got the US Federal Reserve and the Bank of England. They're expected to lift interest rates harder than the RBA. What's your take, and what does it all mean?
Yeah, so as you rightly said there, Ricardo, so the US on a completely different tangent at the moment. They are a much larger economy, and a lot of other economies rely on the US. Hence why there's a bit of a domino effect from their rate rises. So the US and the Bank of England are respectively more than likely going to raise their rates by 75 basis points. Again, their inflation is a runaway train at the moment. US is 10 plus, UK or England is 10 plus % as well. So comparative to our 7.3%. So they do need to go a lot harder and more aggressive to obviously catch up. And that's obviously going to have an impact on Australia, being an economy that relies on the UK and also the US, and like much rest of the world as well. It'll be very closely watched with what happens to the US, because if their rates go a lot higher, there's going to be a significant impact on a lot of economies. And that's a negative impact, to be honest. So it'll be very much interesting to see how much they do it next this week, and how much they do it in the upcoming meetings as well.
Okay, a lot more to us. See what happens. Azeem Sheriff from CMC Markets, thank you very much for joining us live here on our SBS On The Money. Thank you.
Thanks, Ricardo. Cheers.
That's Azeem Sheriff there from CMC Markets. As you mentioned, some more central bank meetings around the world to come this week. The US Federal Reserve, the Bank of England as well. But locally, so the Reserve Bank, if you've just joined us live, has lifted official interest rates by 25 basis points to 2.85%. What does that mean for your mortgage? So Great City says on a $500,000 25-year loan, your average monthly repayment will now increase by $74. But if you add all the rate rises, which we've seen since May, that means you'll be paying $760 more every month since May on that $500,000 25-year loan. So a significant increase in mortgage repayments. However, as Azeem said, those repayments will continue to rise, with the Reserve Bank expected to continue to lift interest rates. And it's having an impact on the property market. Property prices around the country down in October, according to CoreLogic. Those figures coming out today. Brisbane seeing the fastest slide in prices over the month, down 2% in October, according to CoreLogic. So we'll have all of that on SBS World News later tonight at 6:30. We'll wrap some political reaction with Anna Henderson in Canberra. I'll take you through what some of the economists are saying. I'll be speaking with Alex Joyner from IFM Investors to find out where to now for interest rates and if Australians can really afford to keep up with these mortgage repayments. And of course, we'll wait to see how long it'll take until the banks pass on these rate rises, both to their borrowers, their mortgage customers, and to their savers. I'm Ricardo Gonçalves. I'll see you at 6:30.